Hi, guys. I'm Jim, the option professor. Quick background on myself. I'm a graduate of Boston College and attended UCLA for some executive management training. I've been in the options for decades. It was my professional career. So I've been to the Options Institute in Chicago for advanced training, and I have done seminars throughout the nation and Canada for decades. So I'm very experienced in the option area. I'm also very experienced in educating people on options. So that's what I'm going to try to do here today. What I'm going to share with you is some of the ways I'm analyzing the markets. So I'm going to go over some analysis. Then I'm going to go over some education. And then I'm going to go over some what I think is going to happen next. So let's try to hit all three of those areas, and I think we'll have a worthwhile 30 minutes together. We also have got, obviously, analyze your trade. So after I give a quick overview, if you have some stocks you want me to look at, I'm going to show you a couple that I'm looking at right now that are very interesting. So let's get into it. On the S&P 500, I'm going to start out with a 20-year graph. This is where I thought it was going to bottom, and it did bottom. Why did I think it was going to bottom there? Because you got a high point here from 2022, right? And you have my long-term average coming in right there at the same area. So clearly on last Monday, I was all over the buy side here as it came down to 4,800 because that was clearly the destination that I thought it was going to go to. Also, when it's up here and the averages are here, this is called reversion to the mean. And that's what happens. So basically, that's why I was all over that. And that's what I thought was going to happen then. See, I had another area right here with a purple line around 5,000, 49, it was 49.84. So that was another neighborhood where, again, the support would be. If we broke the 4,800 area, obviously the next level down is 4,450, 4,500. Okay. Now, what about now? Okay, we're having a throwback rally, right? Obviously, you get down here, that's oversold. But you see, if you didn't look at the long-term graphs, you would never know that 4,800 and was going to be around the low because you have no price evidence if you just look at short-term charts, right? But you also know on the short-term chart, once it broke 5,800, it was going to accelerate to the downside possibly, particularly when the RSI was up at 45. Once it broke under 40, I mean, it's going to accelerate to the downside. Potentially, and that's what it did. So no surprise here. Now, again, are we going to come right back to the highs before the end of the year? It could happen. But again, last time it happened was COVID. And COVID was what? It was an event, it was something that happened and went away. And the Fed took the balance sheet from 4 trillion to 9 trillion. Is that going to happen again? I don't think so. So that puts the right back to new highs a little bit on the back burner, right? Now, what happened in 2022? Well, in 2022, you had a market come down here, right? And then it came back up to the blue line, and then it made a new low. So people thought the lows were here because of this rally, right? But then they only came and they found out it was a new low. Could that happen again? You know what? It probably may happen again, which means we may go up here now, and then we may have another rendezvous with the gold line down here. Or worst case scenario, you're going to have a rendezvous with the purple line down here. So you need levels. You need to know levels when you're trading, right? Let me show you the levels I just mentioned. I mentioned 4,800. That's the low we've established. I've mentioned levels of 4,500 ballpark area because that would be a lower low, but not a collapse. And then I mentioned the 3,500 area. And the way you go down there is as simple as this. The S&P has earnings of 270 for this year times 23 times 1, P ratio 23 times 270, you're at 6,200. What was the high on the S&P? The high on the S&P was 6,150. So do you understand why we peaked out there? Because earnings peaked out there and valuations peaked out there. So where are we going valuations and earnings? If we have a legitimate slowdown and earnings went to 250, now, that's not much of a slowdown, but even if it went to 250 times 20 to 1 PE, because again, the PE may come back in because of the fact that growth may slow. So at 20 to 1, you're talking about 5,000 on the S&P. There was a guy on Citigroup said in a legitimate slowdown where unemployment jumps a little bit, you could go down to 200 on the earnings for S&P. So if you go to 200 on earnings and then you go to something like 17 on the PE ratio, you're at 3,400, and that's how you get to 3,500. So if earnings were to contract and the PE ratio contracts, which is not what everybody who owns stock talks like, right? They're all talking about this is a dip. We're going right back up. It always goes back up. You know, it goes back up. They always bail us out. You know, if that's the story, then you're not going to hit these lower numbers. But if you do see a legitimate contraction in earnings because of growth, because of inflation, because the consumer gets freaked out, because the unemployment rate goes from 4 to 5, then you're going to have to be prepared for the numbers that I'm mentioning. And that's all I'm talking about, being prepared. Otherwise, you're going to be like a guy with like a deer in a headlight. You know, you're going to be sitting there like many people are now. You know, I mean, this thing peaked out, you know, clearly. I mean, even if you just look at a 1 year graph here, this thing rolled over at 6,100. So people who've held stock all the time, they shouldn't be surprised that their stocks dropped because the trend's been down ever since it broke down, right? So you have to be flexible on your views. Do I want to be bearish between May and February? No, I don't. Why? Because the trends are up. Do I want to be bullish after February? No, because the trends are down. Are we out of the woods yet? I don't know. I think it's way too early to say. And the trends are definitely not telling you you're out of the woods yet. So, you know, be realistic. Now let's talk about Fibonacci. Fibonacci, right? 6150 was the high on the S&P, and the low was what? 4,800. This is rough math, right? 1,350 points drop times 61.8% gives you 835. 4,800 plus 835 brings you at 5635. I've got moving averages in that neighborhood. I think the 20 years got one. No, the 1 year. Yeah, somewhere in the neighborhood of 5,600. You got a gold line there at 5,650. So that's a neighborhood that it could go up to and stop. I'll show you another neighborhood where it could stop, and the neighborhood just got hit. You take 6,150 minus your 4,800. What do you got? 1,350 points. Let's take 50%. That's a fib number. 675. So you take your 4,800, you add your 675, and you get 5475. Well, what's the high been recently here? 5460? Maybe over here it was 5481. You think it's a coincidence it's rolling over from here? It's not a coincidence to me. So you're going into fib retracement numbers, 5475 and 5635, something like that. So again, you know, and then you know, this is how I try to help people. I do coaching part of my situation, so we'll talk about it at the end. But here's the deal. You show me Google going on a rally, and I'm already prejudiced that 5475 might not it might be the top of the move temporarily. Well, then I'm going to be looking at puts. Now, you see when it goes into my blue line at 164 on Monday, you take your shot at your puts there. How are the puts going? Well, let's see how the puts are going. We'll come over here to the puts. And these are ones that expire on Thursday. Never mind the ones that have more time on the clock. And you see numbers like up 50%, up 49%, up 51%. That's what happens when you buy puts at the right time. And there could be more to follow. If you went out with the further ones, like another week, and now you're looking at 128%, and you're looking at 130%. So, you know, that's how I play options. You know, I try to find when the thing goes back up to a resistance zone, then I know the puts are fairly cheap. And then I try to look at a short-term deal. If it got above 165, I would admit mistake. So you're taking a shot here. If you get above 165, you cut and run. You won't lose that much. You'll lose. Good. Well, you can't take a loss. You can't play options. But that's how you try to find winners, right? Let me show you another one here. J.P. Morgan just had great earnings, right? Or good earnings, and you know, things should be on the up, right? Well, what did it do? It just hit the 240 mark, right? So you take a look at your puts right there. Okay, how are those puts going today? Let's take a look. The ones expiring this week. Well, let's say you went out one week. Now these puts don't seem to be moving very much. And this is a factor possibly of that they were so fat to begin with. But this does seem odd. I question these prices because the stock's down at 234. The only way that these things wouldn't be moving is they were so fat, and they are kind of fat. Did you notice the ones I was looking at on Google were much cheaper? Yeah, these things were already so fat that even with a drop, this is a great example for you guys who trade options, okay? Because not only do you have to be right, you have to buy the right price. And if the options are extremely fat, even if you're right, you're going to lose. And that's an example. And, to be honest with you, I'm a little shocked because I haven't been following because I'm not trading JP Morgan. But the point is that that's a perfect example for people that you got a stock that's gone from 240 down to 234. That's a $6 drop in the stock. This is a short-term option, so it should be reacting to it because obviously the thing's in the money. Look at some of these options. They're in the money. These 240, let's get down in here. Yeah, these 240 puts are in the money, but the option's actually down. The only thing that would make sense is they're not current. They're not trading currently. But the bottom line, but it looks like they are. You got volume here. Anyway, it's a good example of what? You got to know how much you're paying for something. If you're paying a big premium, even if you're right on direction, you can lose money or not make much because the premiums are fat. So you got to be careful of that as well. That's something I talk about in the coaching session that's very helpful for people. Because again, guys who haven't traded options a long time, they'd look at their options here today and they go, why aren't I making any money? The stock dropped $6. Well, sir, you paid such a fat implied volatility on it that the time's running out. So you got implied volatility coming out, the Black-Scholes time decay coming out. And you've gotten some volatility to the downside, but it hasn't been enough to overcome the fact that you paid such a fat premium. Okay, so that's a perfect example. And for you guys who haven't traded options at all, that's a wake-up call to you. It's not a wake-up call to me. I already know fat options are tough to make money on from the buy side. Okay, another one I was looking at was Tesla. Wow, look at this one. Well, got to go to the chart first because I think there's an opportunity here. Let me show you a couple of things that I think look very interesting right here. Hang on. All right, here we go with Tesla. A lot of you guys love Tesla. Boy, I do meetings. Hey, I'm in Tesla. Hey, I'm in Tesla. All right, so let's talk Tesla. Here's the story on Tesla, and it's going to be a good one. You see this one-year graph? This is called a traffic jam. I always put it in a layman's term, like on RSI. I always use it as, in my coaching session, think of it as your speedometer. Your car's going above 50, your engine is nice and strong. If it starts going 60, couldn't you go to 70 or 80 pretty easily now because you're accelerating already? Or if you can't get through 60, your engine won't go any faster than that. Aren't you looking at the best your engine will ever be? Conversely, on the downside, you're driving your car and it's under 50. God, the engine's weakening. Now the engine gets under 40. Can it start going down to dying? Yeah, so you could accelerate to the downside. What if it stabilizes out at 40? Well, that's probably as weak as your engine's going to be. And that's an easy way to kind of think of RSI. Okay, now what about this? Traffic jam. Traffic jam means, like in life, everybody and anybody who lived in California like I used to, knows all about traffic jams, right? Or New York where I was born, right? So the bottom line is what? Traffic jams don't last forever. Somebody says you go. And then it goes away, and then it unfolds. Now, why do I call it a traffic jam? Because these numbers here, red, green, and blue, and gold, are all different numbers of all different time frames. You've got a 12 with the red, you got a 24 with the green, you got a 36 with the blue, and the darn gold is 250. What the heck are all those time frames doing at the same price? It's weird. And what is weird? It doesn't last. Weird doesn't last. So you can see most of the time these averages are very far from each other. So you know what that tells me? That tells me that this thing is either going to run up towards 340 or it's going to go into drop mode. And if it goes into drop mode, you could go back to purple here, which is at 236. If it really wants to crack, it could go down to purple here, and that's 127. Huh? How about that? So I think there's a lot of potential on Tesla up or down. I would keep it on my radar for sure. And I would be playing it on the breakout up or the breakout down. But one thing I don't think Tesla's going to do, if we came back and had this little talk in a month, it's not going to be at the same price here at 250. So keep an eye on Tesla. It's a rough racket to trade because for whatever reason, and we know why, the premiums are so ridiculously obscene because obviously anything that can go from 200 to 500 back to 200 is going to have larger premiums, right? So you might have to do spreads in order to neutralize that. But I'm telling you right now, that baby, I'm watching and I'm ready. But like I say, with the blue line pointing down, if you put a bayonet to the back of my head, this thing's breaking down and it's going to break down hard. But if you start breaking above the blue line, green and red are meeting, they could start trending up. If you get above gold, which comes in at what? Gold comes in at 267. So you start breaking above 267, that's a breakout to the upside. And it could get going that way. But again, with this thing where it is, I'd need to see proof before I'd get bullish on it because, again, the blue line pointing down, that's not a joke. You can see when it's pointing up, it's going up. When it goes blue down, it goes down. If it gets violated a little bit, it doesn't last. So keep an eye on it, though. That is telling me you got big opportunity, and the chart, not many charts look like that very often. So you got to jump on it when it looks like that, in my view. I can show you a couple of examples real quick. IBM, you see how they all got together again here? They had earnings coming out. I thought it was going to break to the upside. Why? Because blue was fairly much going up, and these things were going up, and it tested purple and held. So boom, I'm playing this from the upside. Let's look at JP Morgan. Like I say, the setup like that is not often. That's why I'm pulling your coat to it, as they say. Okay, let's look at JP Morgan. Okay, on JP Morgan. Look, you got the consolidation there, all the things. Traffic jam. Somebody's got to say go. Again, red line's turning up. Blue's okay. They have earnings coming out. What are they going to announce, that they're losing money? This was one of the easiest calls of all time. In fact, for 3 weeks in a row on my alerts, I put an idea on this because I couldn't believe I had 3 weeks to do it. Because didn't everybody else know they were going to make money? I guess not. And of course, they made money in the January when they the Q4 earnings, and the thing popped all the way up here. But again, the setup is not the same here, and that's why JP Morgan here looks more like a sell than a buy, because the blue line's pointing straight down, and the red's pointing down, and green's hanging on for dear life. So it's not the same setup as here, so I wouldn't expect the same kind of run like we had here, because this was an uptrend. You see, this is an uptrend. And when you have an uptrend, the surprise will be to the upside. This is a downtrend, so the surprise may very well be to the downside still. Here's the other one I wanted you to see. Gold. Okay, so what do you know on gold? Gold's had a very big run. Why has it had a big run? Because it's in an uptrend. That's what happens, right? Okay, how long has it been in an uptrend? Since 1200. If you go back on the 20-year graph. Had a little pullback here in 2023. And then, of course, it's been on the bicycle ever since 2024. It's also extended, isn't it? Right. What does extended mean for you guys that don't get what I'm talking about? This is where it is, and this is where the averages are, and there's going to be a reversion to the mean at some point. This is the market. This is the averages, a reversion to the mean at some point. This is a high. It's 76 on the RSI. This is a big new high, and the RSI is 68. That's a divergence. That can mean exhaustion. If it's exhausted, it's not going to last. Okay, that sounds great, Jim. Where's your evidence? I don't have much evidence. That's why I'm not telling you to short gold. But I do have a chart here that's telling me to be a little concerned. Now, listen, if you're playing gold and you want to buy it, you can buy it right now. And as long as these things, the market stays above the 320, the 32.36 number, okay, then you're okay. If you break under 32.36 and you get these numbers to roll over and these moving averages, which are converged, remember what I told you, traffic jams are odd. You see the last one over here, traffic jams? How long was it before it rolled over? Not too long. So we got the traffic jam. That's door number one. Door number two is you've got to get the red line to roll over, which it's not doing yet. If it rolls over and the blue rolls over, I wouldn't debate it. But you don't step in front of it until until you get some evidence. You got no evidence right here, right? You want to short it? That's what happens when you short and you got no evidence. It's up $20 in your face. That's what happens when you have no evidence. You want to short it here on the first drop when the blue line's still rising? It's right back in your face. Why? Because you got no evidence. So that's the story on gold. You get in your bushes, you get your duck call going, and you're ready if in case it rolls over. Otherwise, if you're long, stick with it. But again, is there a possible turning point? Possible. Is it happening now? No. Could this thing scream up to $3,500 by next week? Absolutely. So again, put it on your radar. If you're long, keep an eye on it. See if it keeps going for you. Let's look what the 5 days looking like. Same story. You see, it's got to make a decision here. It's got to make a decision. Right here, it made a little bit of a decision to go from 32.60 down to 32.10. That's a $50 deal. And it ran right into purple, so you should have covered down there. And obviously, purple's powerful. That's why it keeps going. But now you've got everybody's in town. You got the purples in town. You got the greens in town, the blues in town. On the 5-day graph, this is like a convention. And that convention is going to start breaking up. Right now, it's breaking up to the upside. But what did I tell you? That 32.60 number, excuse me, 32.30 area right here is key. If you can get it under this area, 32.30, look where you could go to on the gold line. Be a nice little trade for you. Okay. But if they can't break it and you keep selling it against the power, the up 21 in your face is kind of stuff that happens. So that's I can't go over everything in 30 minutes, but I can talk to you if you sign up for the alerts. So here's what we got here for you. And I think David's going to put up, a link that you can sign up. This is small time money, guys. I mean, this is a no-brainer. We got 4 things we give you when you sign up. First of all, most people need more education. So it includes an options master class where it's a 3-session, 6 hours of what? Of education. That's door number 1. And it's a $400 value you get for free. The second thing I give you is I give you alerts where I go through the markets like I'm doing now every Sunday night. And I give you ideas that I think look good every Sunday night. So that comes out every Sunday night. And then the last thing we give you is coaching. You text me and tell me when you're free. I work it into my schedule. I bring my charts over to you. We discuss what you're interested in, things that I think look good, option strategies that you're doing. What are you doing? Short-term options, credit spreads, all these multi-leg spreads. I know how they all work. So we can discuss them and talk about the things that matter. The timing of putting them on, the management of their risk, when to get out, when you're making money, when to get out if you're not, how to adjust the position, strike price and expiration dates. Nice and slow, nice and understandable. So you get education, you get the ideas and alerts, and you get coaching. Now here's the deal. If you do it for 3 months, we're giving $100 discounts now, and you only have to pay $297. That's 90 days of alerts, that's coaching, and that is also the class, the master class. The smart way to go, I think, is the annual, which is $897, which is obviously going to give you 4 times the alerts, 4 times the coaching. And again, I don't know how much money you guys have at risk in the market, But I mean, 897 over a year's time is kind of a joke. And again, we'll go over stuff that you're doing. I'll give you my views. I'll show you how different alternatives you might have that you haven't thought of. And obviously, we'll make sure as much as we can that you get way more than you paid for, which I think we can do. So again, the link will be coming up, and you can take a look at it. I'm trying to see, is there any stocks that you guys wanted me to hit before I sign off? I got 5 minutes before I get the hook here. Do you have an NTGR? Let's take a look. But anyway, that's how it works, guys. And like I say, why would you put it off? I mean, the markets are great now as far as excitement, and you think they're going to get any less exciting for the rest of the year? I'll tell you the big picture real quick in a minute. Either one of two things is happening. We're going to have growth slow, and we're going to have earnings slow, and we're going to have a rough racket. Or the reason he put the 90-day pause on is he wants this off the front page by June 30th, right? And that's what he wants. And he wants the front page to be replaced with deregulation, tax cuts, debt ceiling gets raised, and happy days are here again. So it's either going to go one way or the other. And to pony up either 297 or 897 is obviously a very paltry amount of money to get what I would think is some good information. Okay, so getting back to this NTGR. Netgear. Let's see what it looks like. I always start with the long-term graph. Let's see how long it's been around. I've been around a long time, but I don't know how long Netgear has been around. Apparently not that long. Okay, on the 5-year graph, look at it. The thing's got the red line pointing down. If it can get back above $24, $25, you could get back on the bicycle. If not, this little rally you've had here could be a prelude to more downside. Again, your real support comes in at purple at around $17. So again, I personally would like to see more strength, because look at all this on the daily graph. That's all resistance. So again, it held gold, which is good, but it's in a trading range here. So again, above purple, you're in the now you're up and you're going to go. Again, up until above purple, I wouldn't want any part of it, to be frank. Okay, I got some, well, we're at 27, so I got some more time. Mara. Well, let me show you something on Bitcoin, okay? Because here's the deal. MSTR. This is the, if you want to be in Bitcoin, in my view, this is the way you play it. Why? Because you want to have limited risk, because who knows what Bitcoin will do. So at least when I buy a limited risk option, I know to the penny what I'm risking. And I'd like to make some money. So here's what I think you can do on that. You see this baby here? If it gets above 350, I think it is going to fly. That would probably coincide with the Bitcoin getting back above 92 grand. So if you think that this gold line stuff was the bottom, which is possible, and if you think that Bitcoin's going to have a big second half of the year, then this would be something to keep an eye on. If it breaks above at least purple, and purple comes in at 322, and look what the high was, 319. So if it gets above purple, that would be the time to make sure you get your business in order. And if you want to make, if you think you're going to make big money, that's going to happen when you break above 350. And where could it go? Well, that gives you an idea. Tom Lee still thinks we're going to 150. So if you go out to December and you buy a long-term spread and leave it alone and put a $1,500 or a couple of grand in there, you might be able to take as much as 4 to 5 times out of it, not a big run back towards that 150 level. Again, during coaching, I can explain how that works, but that's the way I would do it. I wouldn't mess around with Mara, but that's my opinion. Google, I already told people hit resistance, so I can show you again. Oh, I already showed you Google. One guy wants Microsoft, and let's take a quick look. 30-second move on Microsoft. See if I can get something here for you. Microsoft's been dead money since July of last year. That's the truth. Anybody want to tell you the truth? That's the truth. This is July of last year, 470, dead money ever since. So now you're trying to catch something that might go back up. And it might go back up. And it could go all the way up to here and still be not that great. It's got a big gap there to fill. So again, how does it look? It's like it's having a bounce. The trends are still down and looking. But again, give it more time so these averages up. Because again, you're just getting a bounce off of a big, big drop.